You've been watching the headlines. Tariff uncertainty, rate concerns, geopolitical noise. If you're like most people in this market, you've been asking yourself, is tech M&A about to stall? I want to answer that today. Because when you look at the actual data, the story is the opposite of what the headlines suggest. Let's start with where we are. This week, the Dow Jones was at 50,000. That's not a coincidence I'm going to let pass without comment. 10 years ago, the Dow was trading in the 17,000s. Even 5 years ago, it was in the 35,000 range. Today, 50,000. That's not a bubble talking. That's a decade of compounding resilience. Through a pandemic, through rate hikes, through every correction the market could throw at us. And the index has more than doubled. M&A follows the markets. When capital is strong, buyers have currency. When valuations are grounded, deals get done. And right now, both conditions are in play. Now, I want to address the concern I hear most often from CEOs. Should I wait to sell? We've been tracking deal valuations across all 6 tech sectors: horizontal software, infrastructure, vertical software, IT services, internet, and consumer for 40 years. Let's look at the last 10 years, though. Here's what it tells us. Strip away the extraordinary spike of 2020 to 2021, which was an anomaly driven by pandemic-era liquidity and zero interest rates, and tech valuations have been remarkably stable. The range across sectors has held consistent. There's no runaway inflation in multiples. The market has corrected, matured, and normalized. That is a healthy market for M&A, not a frothy one, a functional one that you can take advantage of. But valuations are only part of the story. What these charts don't show, and this is the part that often gets missed, is that the buyer pool has expanded meaningfully. More acquirers are active in tech than at any point in our tracking period. Indeed, Corum is tracking over 19,000 buyers for clients currently. Strategic buyers, private equity, growth investors, across all 6 sectors. The number of participants making tech acquisitions has grown. And behind those buyers sits an enormous amount of uncommitted capital, dry powder, waiting to be deployed. The demand side of this market isn't weakening, it's deepening. Today there's over $6 trillion available for tech acquisitions or investment. So here's where I land. Yes, the macroeconomic environment is complex, it always is, but the fundamentals that drive tech M&A, stable valuations, an expanding buyer base, deep capital reserves, and a Dow that just crossed 50,000 are all pointing in the same direction. The opportunity in tech M&A has never been stronger. If you're thinking about a transaction, whether you're a buyer, a seller, or somewhere in between, this is not the moment to wait on the sidelines. So that's my view from the CEO's desk. Thank you for joining us today.